Independent Marketing. Thanks again for joining us on our bi-weekly webinar series here. Today we're covering critical illness. In particular, we'll be going over the product available through Guaranteed Trust Life. Although this particular product is not available in California, I think those of you who are in California should listen in anyway because the overall concept is the same. We do have other business partners available in California with Surety Life and American General that offer some superior critical illness products as well. So don't leave me just because this particular product's not available in your state. And plus you may have a non-res license elsewhere where the product is available. But again, we're going to be highlighting today the critical illness, a particular critical illness product available from Guaranteed Trust Life. They have three different products available in the marketplace, but we'll be focusing on one called Critical Care. GTL, just outside of Chicago, has been around for quite a while. It is a privately owned mutual company being run currently by the third generation of the same family who founded it in 1936 by the name of Holson. They are currently licensed in 49 states. The only state they aren't licensed to do business is New York. New York is a unique state that requires you to be domiciled in that state in order to offer insurance products there. But they have been at it for quite a while. They are known for being a niche insurance company, niche product. They have a slick product that they're very busy signing people up for right now during the open enrollment for Medicare. They have a hospital indemnity plan called Advantage Plus, kind of the industry leader in that marketplace, and they average about anywhere from 1,000 to 2,000 applications a week during the annual open enrollment. So keep that in mind if you're involved with that as well. But again, they've been at this type of business for quite a while. We approached them about 3 years ago with our business partner Golden Care to kind of develop a one-off product as a potential landing spot for people who would not qualify for traditional long-term care. And they came up with this product which they now call Critical Care. We believe this whole critical illness marketplace is evolving, especially now that we've gone through the first enrollment for healthcare reform. People have realized that there are some significant gaps in the coverage they may have purchased through one of the exchanges in their state or the federal exchange itself. And there's a bona fide market for these additional niche type products to help fill the gaps that these new healthcare reform and or Medicare Advantage plans open up for a person's pocketbook. So long-term care insurance, we believe, is a bona fide piece of insurance that should be offered to just about everybody you talk with, but the reality is that it's becoming harder to qualify from an underwriting perspective, and the prices are going up. So offering an alternative like Critical Care to your clients is basically the saying is having something is better than having nothing at all. So this actual Critical Care product, and I'll get into it details here in a couple of minutes, it's a hybrid. It's not a pure critical illness and it's not a pure long-term care, but it grabs the best features from both scenarios into one particular product, and you'll understand why as we go along here. But why a product like this? This would be true of any critical illness insurance product that we have that you can acquire through us and offer to your clients. Basically, modern medicine continues to improve the survival rate of people being diagnosed with a critical illness, such as cancer, heart attack, or stroke. And the higher exposure for the need for long-term care. You've heard of this whole campaign, that's a national campaign called 3 and 4 Need More, where it's believed that 70% of people over the age of 65 are going to need some form of long-term care help in the future. And again, without proper planning, either scenario could have an unfortunate, tremendous financial impact on someone. A few statistics, and we're not one, I don't think it's a good sales method to go out and threaten people with statistics, but it's good to have this knowledge base that basically half the bankruptcies in the U.S. are caused by medical expenses. And 80%, nearly 80% of the people that did declare bankruptcy had health insurance. So it just goes to show you that there's the hidden costs that go along with getting a diagnosis of a bad disease. or illness can have a tremendous financial impact on people. All the hidden costs that go along with a medical claim. Sure, you're basically your medical part of it, the doctor part, the hospital part may be 100% covered by their insurance and or Medicare, but there are plans that do have copays. If you were diagnosed with a cancer and the best source for treatment for that cancer was the MD Anderson Cancer Center in Houston, Texas, it might bode well for you to make that trip down there for treatment. And even though your health insurance may cover that event, what it won't cover is getting you there, housing you, and feeding you while you're seeking that treatment, let alone if you took somebody with you for assistance. I think you'd be hard-pressed to ask anybody you talk with on the street, your clients or other agents, that do you know anybody who's been diagnosed with cancer, heart attack, or stroke? And I don't think anybody could really answer that question. No, I've never have been exposed to anybody who's been diagnosed with cancer, heart attack, and stroke. And the next question could be, logically, is if a little additional cash were flowing into the household, do you think that may have reduced the financial stress a little bit by having that diagnosis? And I think people would be hard-pressed to say no to that as well. So critical care. It's a hybrid, as I mentioned earlier. It takes the best of the critical illness type offerings, and it takes the best of the long-term care, and it kind of bundles it together. We call it basically critical illness on steroids. What it does is it gives the policyholder an influx of monthly cash that can be used to help offset lost income. Maybe if there's some rehab expenses that are not covered by the insurance, alternate treatment options, maybe there's some experimental treatment that would not be covered by traditional health care, that the payments from the critical care policy could go a long way to help. Lifestyle changes, just ordinary daily costs of being around. Just because you get diagnosed doesn't mean your mortgage payments go away or your credit card payments go away or a car payment or just the expenses of just daily living. They're still there and present. So what GTL has to offer with their critical care actually is 3 different policies. They have a fully comprehensive, what we call Plan A, that covers 12 conditions. Cancer in situ, and for those of you who don't know what that is, it's basically cancer that's limited to one organ, very early stage breast cancer or very early stage prostate, heart attack, bypass surgery, stroke, Alzheimer's, kidney failure, major organ transplant, paralysis, and coma. But you may have a client that has a history of cancer in their family, and they're more concerned about getting coverage just for the cancer part of it. They can elect Plan B, which would just take out all the heart-related coverages, but give them cancer coverage along with the other major coverages like Alzheimer's, kidney failure, paralysis, and coma. And vice versa, you can also pick up the product that only has the cardiac part of the care, along with the other major diagnoses as well. And as you'll see through the underwriting process, there's 3 different ways to qualify, because you're asked some questions on the application. In the past 10 years, have you had heart issues or have you had cancer issues? So if you have to answer yes to one of those questions, you can qualify for a Cancer Care Plus or a Cardiac Care Plus as well. So 3 different ways to qualify for the coverage. Interestingly enough, the conditions that are covered by critical care actually cover 4 of the top 6 reasons why that lead to a long-term care claim. Alzheimer's, stroke, and cancer represent 70% of long-term care claims out there, and those diagnoses are covered with GTL's critical care offering. Most traditional lump sum type critical illness policies do not cover Alzheimer's, whereas critical care does. And it also pays an accelerated benefit if you are confined to a long-term care facility as a result of that disease. And I'll give you an example of how that works here in just a couple of minutes. Most every critical illness policy out there also has a maximum issue age of 64. This product goes all the way up to age 84. So it's great for your more senior type market, where they can still get coverage where they perhaps would not qualify for a traditional long-term care coverage because of their age. It pays out a monthly benefit, and there's this term used with critical care called restoration of benefits. I need you to take off your long-term care hat when you listen to that term. It's a little bit different, and I'll get into that in just a minute. It does stand apart from your traditional long-term care because you can potentially trigger benefits sooner. There's no deductible period or elimination period associated with this. It's diagnosis triggered. It's not outcome based. The underwriting is quick and easy. We're seeing an average turnaround of 2 to 3 days during the underwriting process. Very simple, very high issue rate. We're experiencing north of 90% issue rate, which is very pleasant to see nowadays, which means you get paid more often. And again, I mentioned earlier, there's no elimination period for any of the benefits. There's just an initial 30-day wait period where you cannot file a claim within the first month of owning the policy. So a few decision points to make while you're looking to apply for this coverage. You select a monthly benefit, the minimum being $500 a month, the max being $3,000 per month in $250 increments. You can bring dependents on board your coverage as well. They're a levelized benefit of $500 a month up through age 26 if they're still dependent upon you at that age. Otherwise, it cuts off at age 18. And as I mentioned earlier, there is a kicker if you are confined to a long-term care facility as a result of a diagnosis. If you have a stroke, for example, and you are discharged from a hospital to a skilled nursing facility for rehab, if you selected a $3,000 base benefit per month, you would get $6,000 a month for as long as you're in that nursing home. And if you're discharged from there down to assisted living, you would get $4,500 a month. So it's a 50% kicker for assisted living, and it doubles the benefit for nursing home. The example here at the bottom of the screen shows a base benefit of $2,000 a month. It would be worth $3,000 a month in assisted living and $4,000 a month in a skilled nursing facility. After you decided what monthly benefit you like, you select a benefit period, 6, 12, 18, or 24 months. Which means if you buy an 18-month policy and you have a stroke and you selected the $2,000 per month benefit, the policy would pay you $2,000 a month for that full 18 months. Even if you recovered 6 months after being diagnosed with a stroke and were back at work, you'll still get 12 additional payments at $2,000 a month. So it's, as I mentioned earlier, it's diagnosis driven, not outcome based. And similar to long-term care insurance, you do establish a maximum lifetime benefit, so you can claim multiple times into the policy. Most traditional critical illness policies are what we call one and done. It's a lump sum benefit. You claim once and the policy is done. Whereas with this particular offering, you can claim multiple times as long as there's at least 12 months in between claims. A few of the benefits are limited as far as the amount of time they'll pay out. Cancer in situ is a 3-month benefit. A heart attack is 3 months. Bypass surgery is 2 months, and coma is 3 months. That's because the recovery time for those types of conditions are usually rather quick. Otherwise, all other conditions in the policy are paid at 100% of whatever the chosen benefit was. As I mentioned a little bit earlier, there is a maximum policy limit you can have with each policy. An example here would be if you elected a $2,000 base benefit in a 24-month period of time. You take the 2,000 times 24, which would be 48,000, times 6, and that establishes the maximum lifetime benefit for your policy of $288,000. So you can keep claiming against your policy until that pool of money is gone. Here's an example of a person who bought a two-year plan at $2,000 a month for a base benefit, which would equate to a $4,000 nursing home benefit with a maximum lifetime benefit of $288,000. The initial claim is diagnosed with a stroke. The policy pays out for the 24 months at $2,000 a month, which equals $48,000. That reduces the lifetime benefit down to $240,000, still remaining in the pool. 3 years later, the client has a diagnosis of cancer. It's invasive, therefore it pays out the full benefit of 24 months. Again, it reduces the policy limit by $48,000 and it still leaves $192,000. And for whatever reason, 6 years later, the client is diagnosed with a second stroke. Again, the policy would pay out for the entire 2 years at $2,000 a month. Another example we've used in the past is when Dick Cheney was in office. He had 5 heart attacks, and 4 of those would have been covered by this policy. 2 of his heart attacks were less than a year apart. That's why they were, that fourth one that one would not have been covered. Rates are very easy to calculate. The agent guide that comes with the kit on critical care has a simple rate book, 1 page for Plan A, 1 page for Plan B, and 1 page for Plan C. Rates are levelized based upon the application age, and they're guaranteed renewable as long as premiums are paid. And here's just a couple of examples of rates based upon age for a base plan of a 12-month plan at $1,500 per month. So it's attractive from a premium perspective. It's affordable. As you can see, the Plan B is about a 40% discount off Plan A, and Plan C is roughly about half in some cases of a Plan A. So there are some savings to be had just by going after the Cancer Care Plus or the Cardiac Care Plus as well. Underwriting is significantly different with critical care than it is with long-term care. Very simple yes-no question application. There are some heavy-duty knockouts on the application as far as if you have any of these conditions, do not bother to apply. But otherwise, the questions are fairly innocuous. There's no height weight at this point in time during the underwriting process. It's an accept and reject right off the application. They do order an MIB report and an RX check. And if an RX check comes back suspect or the MIB comes back suspect, they could call your client to ask them for clarification. Or in some cases, in about 10% of the cases, they do actually order medical records, and if that were to occur, your client has to get those records at their expense and submit those to GTL for review. But again, as I mentioned earlier, the underwriting time is very expeditious. It has decreased from the regular 5 to 8 business days. We're seeing it in about a week. They also have an online application that you can use on GTL's website that would normally knock about 2 days off the underwriting process as well. So to give you a sneak peek at their illustration software, once you're appointed with GTL, you can download this quote software besides having the rate book. Very simple to use. You just select a state where the product's available, and it's available in quite a few states across the country. Put in your client name, their age, the plan you're applying for, whether it be Plan A, B, or C. Select your benefit period of 6 to 24 months. Your benefit amount, and the premium is displayed right there in front of you, or if you want to show your client what the proposal looks like and hand them a piece of paper, you can print this off. There's the proposal sheet for displaying the rates. Very simple to use. If you're working with a married couple, both looking to apply for this coverage, they can apply on one application. The savings there would be, there's no spousal discounts, but the savings there would be that you only have to pay one policy fee, which is $25 per year. And then you can have up to 5 dependents covered under the same policy as well. They do not have to elect the same benefits. They will each have their own schedule page as far as benefits. So you could have a husband who's buying a 2-year plan at $2,000 a month, and the spouse, I'll just input the spouse. Okay, for Washington State, software is pretty foolproof so also because it won't let you make a mistake. Here we go. I went to Oregon, and the spouse is going to apply for 18 months of coverage at $3,000 a month for a total premium here of $282 a month. So very simple to do an illustration here, or like I mentioned earlier, the rate book is very simple as well. So again, this is a viable option to look at if you're working with someone who is potentially interested in long-term care, but in your conversations with them, you realize that there's no way they're going to qualify for any carrier out there, but they would like to still have some form of coverage. You can sincerely explore this as an option. It's not limited just to long-term care declines. Critical illness itself is a viable option for gap coverage for anybody, whether it be an individual health insurance client of yours or in your more senior market on a Medicare Advantage. It just gives a little bit of extra cash flow coming into the household based upon a serious diagnosis happening. So keep it in mind in all the different venues you're working with. I'm going to go through and unmute people. If you have any questions, the only way you can ask me a question would be if you would input your audio PIN number. If you haven't done that, please do so, or go ahead and if anybody has any questions, would you please bring them up at this time? As I mentioned, this policy is not available in California. However, don't give up the ship because we do have two viable options down in California with the Surety Life and American General. They offer coverages, lump sum type coverage, anywhere from $5,000 to $500,000.
You need a sweater.
Any questions out there at all on the product from GTL or critical illness overall as a strategy? Okay, coming up, our next webinar this Friday is going to be on Phoenix Life with their suite of annuities, fixed index annuities available to you. I'd like to thank everybody for taking the time to join me this morning. Hope you learned a little bit more about this particular product and how you can add it to your quiver. Best of luck during the rest of the open enrollment season, and have a great day.